Hello, hello, everyone. Yes, I have a weed sticking out of the top of my head. My name is Victoria McCoy. I'm the National Public Relations Chairperson, and we're here for our monthly Zoom. And it's April, tax season. Nobody likes it, but we're here. We're talking taxes and how it pertains to the organization as a nonprofit. Whether it's this organization as the Marine Corps League, or you might have this information to take back to another organization that you're a part of. So we're glad to be here. I'm decorated a little bit. You know, we didn't have a shamrock here for St. Patrick's Day, so I got a little Easter theme going on. Yes, I'm silly like that, and that's okay. We need to smile every once in a while. So at this time, before I introduce my guest speaker for the evening, I am going to ask Commandant Warren Griffin for some opening remarks. Go ahead, Sir Commandant.
Thank you very much, Victoria. And yes, we do have to smile a little bit every now and again. It does everybody good. I want to thank you for putting on the scuttlebutt, coming up with these topics. I know that I will be educated tonight along with everybody else because nobody knows everything. So it's good just to have uh, a timeout from our hectic lives to just pick up a little bit on the Marine Corps League. And again, thank you very much, Victoria.
You are very welcome, sir. I'm glad to bring all of these informational Zooms out there. Okay, I'm going to introduce our guest speaker for the evening. Okay, our presenter, which is tonight, is Ann Stoll. She joined Eid Bailey, and I probably pronounced that wrong, and I apologize for that, in 2008, which is I'm assuming a tax firm, specializing in serving tax-exempt clients of all types, including private foundations, public charities, voluntary employees beneficiary association, social welfare organizations, social clubs, and other nonprofit sectors. She provides consulting and compliance services for a wide range of tax issues, guiding organizations through the many state and IRS regulations that nonprofit organizations face in obtaining and maintaining their tax exempt status. Outside of work, Ann enjoys spending time with her family, camping, biking, and volunteering. She has served as a board member of various nonprofits and is currently serving as the vice president of the North Dakota CPA Foundation, the treasurer of the North Dakota Association of Nonprofits, and the treasurer of the Fargo Moorhead Science Museum. That is a great resume, ma'am. I am going to make sure that you have share screen privileges at this time. You go ahead and you have control, ma'am. We're happy to have this presentation.
Well, sounds great. Thank you, Victoria. So yeah, it is Eid Bailey is the company name, and we are a CPA firm. And I'm going to go ahead and I'm going to start sharing my screen here because I have some items I want you guys to be able to see. So you should be, there, you should now be seeing our slideshow. And starting this off here, I do have, as a CPA firm, I have a wonderful disclaimer right here coming up next, if this works. Oh, there it is. Okay, so basically, kind of like Victoria said, you know, this is a very general presentation. It is one. We're not giving any specific tax advice at this time. If there are any specific questions, feel free to reach out. But the information provided here is informational, general in nature, more educational, not specific to tax advice. So wanted to give a little background on our firm. So Eid Bailey, we are a top 25 CPA firm. We focus primarily in states west of the Mississippi, but we do have individuals that work really all across the United States. We've got 40 plus offices across the US, very much a national firm, clients in every state as well, and 375 partners and 3,000 plus staff members. Also wanted to share too, because this is a little bit of a nonprofit focus, that is an area that we focus on as well. We have over 350 dedicated nonprofit staff that work kind of like I do with just tax exempt organizations. Founded in 1917, we celebrated our 100-year anniversary a few years back, and we've got 3,400 clients that we serve within the nonprofit sector as well. So kind of that snapshot to the right side hits our nonprofit piece. So there's me. Victoria introduced me already, so not going to go into too much information there, but wanted to share our agenda. So kind of the main topics that we'll talk through here is looking at setting up a nonprofit. And then with the Marine Corps League being a 501c4 organization, looking at, 501c4, kind of narrowing that down and looking at treatments of contributions to 501c4 organizations, the IRS compliance that you guys have to face, and then a few other compliance items that you should consider. So let's start with setting up a nonprofit. Where do you kind of go? Where do you start from there? And this is something where the first place you're going to look is to the state and to say, well, when we're operating within the state, we need to exist first. So you're looking at types of organizations. It could be nonprofits. Oftentimes it's a corporation. And you can set up as either a stock or a nonprofit. When you're setting up a corporation, there's trusts that could be set up. If you don't want to incorporate, could have an unincorporated association, limited liability, partnerships, or some other form of entity. But you do have to have some sort of legal status that you've established. So then the next question is, once you exist, now, are you wanting to be taxable or tax exempt? If you are a taxable organization, the next step then would be looking at your operations, begin operating, and file a tax form. This is something where your nonprofit piece to it basically would mean that you are not operating for the benefit of an individual. This is something where you're operating, your earnings stay pretty internal, they get rolled over into future operations. Your net income would be taxable, but it is something where you're operating for a purpose outside of profiting other individuals. This is, you have a specific purpose that you operate for. The tax form, if you don't become tax exempt, is based on your legal status. So if you are a trust, you're going to file a trust form. If you're a corporation, you're going to file the corporate tax return. So if you want to take it one step further and become tax exempt, the next step then is typically you're going to have some sort of filing that you're going to have to complete in order to be able to show that, yes, we are tax exempt. It's going to need to be provided over to the IRS. And depending upon the type of organization, really depends on the form that you have, that you want to file. So if you were looking at being a 501c3 organization, this is the most popular tax exempt type of organization that we see. These are your public charities, your United Ways, can also include private foundations, can also include hospitals, schools, and other organizations within that category, churches. But it is one where this is by far the largest category that the IRS sees for tax exempt organization, and the one that most individuals would be familiar with, as they are familiar with that 501c3. The next category that we have is 501c4, and I'll go into a little bit of additional information on that one, but it's a social welfare organization. Again, you have a purpose that you're benefiting, that you're operating for, and that's what you benefit. For 501c4 organizations, if you're looking at setting up a new one, there is a Form 8976 that you need to file, and it needs to be filed relatively quickly within your date of formation. So once you've formed, within 60 days of formation, you do have to have that Form 8976 into the IRS. It's a pretty short form. If you don't get it in within that time frame, it is something where there are penalties with it, which the IRS can abate if you can show reasonable cause for not filing that. But wanted to mention that because that is a new requirement, relatively newer form that's come out in the last few years here. And then the 501c4 could choose to also file a 1024A, which then they would send over to the IRS. The IRS would then respond with either a determination letter or request for additional information. And the third form that's possible out there that entities might need to file is a 1024. And this is out there for all other types of organizations. So this could be a country club, your social organizations. It could be a benefit plan, cemetery organizations, the various military organizations. Some of them are on there too as well. So, and there is with other organizations, you may not need to file that 1024. That's one where you could self-report for certain organizations, but I'm not going to go into too many details there. If you're looking at C4, you do have to file the 8976 and then may need to file the 1024 if you want to provide additional information, or if you want to get that additional confirmation that the IRS looked at your activities and agrees that all of them fit within that 501c4 purpose.
Right.
So going into that purpose piece, requirements for a 501c4, you have to be organized and operated exclusively to promote social welfare. You should further a common good and the general welfare of the people in your community or whatever area of impact you have. The earnings from the 501c4, so we've kind of has been the theme throughout the presentation so far, cannot benefit private individuals. You are operating for a purpose beyond benefiting an owner or an individual. And you do have to notify the IRS of your intent to operate as that 501c4 entity. And that is a notice that needs to be given shortly after you organize. You do have the ability to conduct lobbying and political activities as long as this is not your primary purpose. You can conduct any political or lobbying activities. So we do see 501c4 organizations become active in that area at times. So 501c4 organizations are not charitable organizations. Question that comes out then is, how do you guys, can you receive contributions? Do you receive contributions? What do you do if you get a contribution? And I have some items here that I wanted to make sure to point out to you guys. So yes, first thing, you can receive a contribution. What is a contribution though? This is something where it's a gift. There's nothing that you as a 501c4 are providing in exchange for that gift. So this would not include any fees for a service that you're performing or any fees or exchange of goods that are being purchased from you. So I think of like if you have easy example is a hospital. If you break your arm, you go to the hospital and you pay your bill. The hospital is a 501c3. That's a contribution? No, it's not. That's a payment for them to repair your arm, the medical services that you receive. If you go to the hospital and you write them a check for $5,000 and they don't do anything, you're not there for an appointment, you just dropped the check, walked out the door, or mailed the check to them, they're not providing any goods or services or any need to have any additional communications back to you, that is something where that is a gift. So same with your C4 organization. If it's something where someone's coming to a meeting and there's dinner at the meeting and they're writing a check for the meeting and the education and those components, they're getting the dinner, they're getting the education that's being provided in the meeting. That's a payment for the goods and services. If it is something where they just mail a check, there is nothing, it's not payment of their dues, it doesn't make them a member, it doesn't change anything for their status, they're not getting anything in exchange for it, that check that they mail to you could be looked at as a contribution. Now, difference that a C4 has from a C3 is that it's not a charitable contribution, so it would not be deductible by an individual as a gift to charity. Charities have that specific component as a 501c3 organization. It's a 501c4 organization. You can still receive the gift, but you do have to have a statement that's included in your fundraising solicitations indicating that the payments are not deductible as charitable contributions for federal income tax purposes. And that should be both in the solicitation, and then it should also be with the payment too. And it needs to be conspicuous and easily recognizable. So this is something where if a reasonable person were to look, would they be considering that they should be getting a 501c3 charitable deduction, or are they looking at providing a gift and not looking for that charitable deduction? I would say if you're putting anything out there, kind of keep that in the back of your mind. You know, is it something that, can you see it? And is it something that's recognizable that it's not deductible as a charitable donation, that you guys are a 501c4, it's a donation, it's a gift, but it still is one where not deductible for federal income tax purposes. There are some additional trackings that you'd want to be aware of too when you are receiving contributions. So if you have any donors that are giving $5,000 or more, the contribution does need to be included on a Schedule B of your Form 990. If you are completing a Form 990 or a Form 990 EZ, there is a Schedule B that would need to be completed. The name and address of the donor does not need to be included in that Schedule B. Just the donation amount would need to be listed on there. So if you've got 5 of them, you'd have 5 of them listed. It would just have $5,000 in there 5 times. The internal records that you guys keep should have the names and addresses for each of those 5 donors documented, so that way if the IRS were to ask, well, you have these donations listed, did you have anyone that gave over 5,000? You can then say, yes, we do. Yes, we did. We included them on the Schedule B. We did not include their names and addresses because we are not required to as a 501c4. However, if the IRS asks to see, you would need to provide that information for them. And the other thing to keep in mind too, from a donor standpoint, if you have a donor that's giving money to you for a specific purpose and they restrict that payment, this is something that you're going to want to be tracking that payment, so that way, if you have an expense, or if whatever they've restricted that donation to you for, if that comes to pass and now you can apply that money towards that piece, you know what money you're applying to the expense or to the whatever it is that you're incurring, that you can track those donations and know, okay, we have these donations are specifically restricted for this purpose. These donations we can use for our operations, and be able to record and report that properly. So some IRS compliance for 501c4 organizations. You do have a tax form that you would have to file. So we talked about that initial tax form that's done once a year with the 1024A that's filed, and that 87, oh gosh, it was 8976 is what those 2 initial forms, those are a one-time filing. But on an annual basis, you'll have an annual tax return that you need to file. And it really is more of an information return, because as a 501c4, your primary exempt purpose, so those social welfare activities, are going to be tax exempt. So you're not calculating a tax, you're providing information over to the IRS. And we've got 3 primary forms that you would wind up completing, and they are based off of your gross receipts or your assets, some variation therein. So the Form 990N is a pretty simple form. If your gross receipts are less than $50,000, and that's an average, so it could fluctuate, but looking at the past 3 years, gross receipts are less than 50,000 on average, then it is something where you could qualify for that 990N. Between 50,000 and 200,000 in gross receipts, or if you have assets over $500,000, or under $500,000, you could file a 990 EZ. And then if you hit that threshold of over $200,000 in gross receipts or assets over $500,000, you do have to complete a full Form 990. So some things to keep in mind on that. Gross receipts, what is that? So that's the money that you are taking in. That's those contributions, any membership dues you guys are receiving, interest, dividends, any payments for goods or services. It's your income. So the receipts that you guys are receiving, you can't reduce them by any expenses that you're incurring. It's just straight income that you pull in. The assets are the items that you hold. So if you've got a building, if you've got cash interest or cash investments, any receivables that you guys might have, those all would count towards that piece. And it's important to make sure that you do get these threshold dollar amounts right, because if you fail to file an annual return for 3 consecutive years, that is something where the IRS has come out and said, if you don't provide us that annual return and you fail to file for 3 consecutive years, we're going to take your exempt status away. And even if it is something where you hadn't filed or you had a group exemption or group ruling and somebody else was filing, putting that information together for you, you're still going to have to go in and file these annual reports. And then if you fail to file for that 3 consecutive year period, you do lose your exempt status. There is a reinstatement process. However, it's very detailed, basically requires you to reapply and in many instances file tax returns for those missing years. So it can be quite costly as well. Going into a little bit more detail on those 3 different forms that we talked about, that Form 990N, gross receipts were the least amount. There isn't an assets test on this one. However, that gross receipts piece, if you exceed that amount and file the 990N for a year that you didn't qualify, the IRS has also recently come out to say, okay, if you're filing a tax return for a that you don't qualify for a year, that return is the same as if you did not file for that year. So if you have gross receipts over the $50,000 threshold, say you have $100,000 every year, and you've been filing the 990N for 3 consecutive years, you've now filed the wrong tax form. And so you are in jeopardy of losing your exempt status and having to go through that reinstatement process. It's called a postcard filing, that 990N. It has to be filed electronically. You do have an ID.me account or a login.gov account that you'll need to set up. So it has a little bit of an extra step to it these last couple of years that has come into play. However, still pretty simple. You need 8 lines of information, things like what's the name of your organization? What's your address? Who's responsible for you? If we have questions, can we reach out to an individual? What's their address? What's their phone number? Do you guys have a website? Are your gross receipts less than $50,000? And the whole thing is submitted under penalties of perjury. So make sure you do have some information to support what you're putting in there in that gross receipts component, especially. Due 4.5 months after year end. So if you have a calendar year end, it would be due May 15. Second form on the list is that 990EZ. This was kind of that mid form. It's a 4-page core form, and then you could have up to 8 additional schedules. This one also has to be filed electronically, same due date for it. This one comes with penalties though, if you don't file for a year or if you file late. And the penalties are assessed daily. It's $20 a day, could be up to $12,000 or 5% of your gross receipts. So get it filed timely, save yourself some money and headache. And then the Form 990, this is the one where if you have over $200,000 in gross receipts, or if your assets are more than $500,000, then you do have to file that full form. 12 pages to the primary form, so everyone's completing that one. There's also 16 possible additional schedules. Those would not all be completed by everyone, but as a C4, you might have a couple of them that you do have to complete. And this again needs to be filed electronically, due 4.5 months after year end. Penalties depending upon your gross receipts. If you're a smaller organization, you might be at that $20 a day, but it could be up to $120 a day. And the tipping point is at about $1 million in gross receipts. So if you've got over $1 million, they're gonna assess higher penalties for you, and up to $60,000. So some additional IRS considerations. There's a Form 990T. We've talked a lot about your exempt purpose and the program that you guys conducted, that you're operating for that different purpose, that is social welfare that you're doing. And there is a Form 990T that could need to be completed. This would be for those activities that are outside of your exempt purpose. So if you have something that you're regularly carrying on that's not related to your exempt purpose, and that's a trade or a business, so the contributions that you're getting, those are not going to be considered for the 990T. It's not a trade or a business. It doesn't have that exchange component to it. But if you do have any transactions where you are exchanging a good or a service, and it's not for a social welfare purpose, that could trigger this 990T. Some things that we see commonly are if you have a building and you have some extra space in it, allowing other people to use your building. That could trigger it. It's the use of your space doesn't in and of itself have a social welfare component to it, depending upon who you're allowing to use it, if it's just anyone. And if they're allowed to rent it, it's regularly carried on, and there are landlords out there that rent space. Same thing with advertising. We see that quite often. If you have a membership directory and you are going in and you allow others to put an ad in there for present this coupon, get $5 off an oil change. Well, there's advertising companies out there. It's regularly carried on in your monthly newsletter, and it is something that advertising is a trade or a business, doesn't have a social welfare component to it. The Form 1099s, hopefully that's something that you guys have all just kind of gone through that process, but this is one that these are typically due in January. But this is for payments for services, could be rents also, but they're generally payments for services over $600 if you do have others that you are paying to do services for you. W2G, if you do any gaming, this is another form that you could be required to file if you have any raffles, bingo, those types of events. Payroll, of course, W2s, W3s, 941s, making sure that those are filed either quarterly for the 941s or annually for the W2 and W3. And then if you have investments, or if you provide grants outside of the US, or any activities outside of the US, or if you have any signature accounts that are outside of the US, there could be international reporting as well that you want to consider. And then just to kind of tack on the end here, we've got a couple other compliance items that we wanted to put out there. So state's going to have their own set of compliance. So they generally have a business registration, and some states may also have a solicitation reporting. So for North Dakota, I know our business registration is one that was just due here at the end of January as well. And this is for anyone that was incorporated in North Dakota, or anyone that was doing business in North Dakota, that maybe they're incorporated in another state, but they also provide benefits in North Dakota. Lobbying, if you are doing any lobbying as your 501c4, you would want to have your lobbyist registration forms up to date. State payroll reporting, if you're doing any of those bingo or raffle or other gaming chances to win type activities, those are reports that'll be ones that you're going to want to consider. And I know for North Dakota, again, that's a quarterly report. And then other reports, some states have franchise taxes or other reporting components that they're going to have you complete for them. And then board considerations. As you're looking at your year, this is something where it's always helpful to review your organizing documents, your articles of incorporation, if you're a corporation, your constitution, whatever the document is that governs your organization, any bylaws that you have, make sure that you are up to date, you're complying with them. If there are changes that need to occur, one of the things that we saw a lot in 2020 was that we had organizations that didn't have the ability to meet electronically. And so all of their board meetings had to be in person. Well, when we suddenly found that we could no longer be in person, that created a little bit of an issue for those organizations for how to conduct their board business if they weren't able to get a quorum, or how to work on those pieces. So it's definitely something that you want to keep in mind as to what do these documents say? And if they haven't been refreshed for a while, should they be? Conflict of interest policy, keeping that in everyone's minds as transactions come up. This is something that you're going to want to look through. Budgeting, just because you are a nonprofit does not mean that you are not a business. You still need to be able to keep the doors open, because if you cannot keep the doors open, you are not going to be able to serve your purpose. Just because you are not benefiting an owner doesn't necessarily mean that your purpose should be neglected, or whatever it is that you're looking at. You need to be able to make sure that you can pay the bills, make sure that you can keep the doors open. Consider if you need to have a reserve on hand. Nonprofit doesn't leave you with we have to make everything zero at the end of the year. Many businesses are not going to want to do that, because they do want to have some sort of reserve to be able to operate into the future. Reviewing any compensation, any benefits, go in and do those. If you have a document retention and destruction policy, looking at those, cleaning up your files. And so these items, they might not have due dates, but they really are helpful for your organization, and they should be periodically reviewed. I would say everything on this list should be at least yearly, and it is something that you could be looking at more frequently too, if it is helpful for your organization. But it really will help with smooth operations for your organization if you are looking at these items. So I've got time here for questions if you guys have anything.
Oh, there's lots of questions.
Oh, good.
I am going to ask you to stop sharing your screen.
Yes.
If you would, please.
Yep. Let me.
Now, I will tell you, there's been some chat going on while you were speaking, and I could not answer anything or act upon it. So those that were chatting over there on the right, while I'm recording, I couldn't really respond. We're going to ask these questions now. Looks like there is some banter, chat, if you will, over in our chat box as it pertains to the comment you made about an individual donation. If I say, Joe Schmuckatelli, thank you for your donation. Yeah. It is tax exempt. Is that a federal law, or is it state to state? And does it pertain to veteran organizations?
Well, state to state, each state's going to have their own specifics on it. From a federal component, there for the 501c4 organizations, the donations are not deductible. If it's going to one of the military organizations, so like a C-19, I think it is, then that's something where those ones could be deductible. But in general, just going to the C4s, those would not be, unless you guys have some sort of private letter ruling. Someone did say something about a special IRS ruling, and that I have not seen.
Okay.
But that one's a federal piece where the donations to a 501c4 are not listed in that particular code section that covers the charitable deductions.
Okay, is there any national officer that can speak to that? Do we have a special IRS ruling as a 501c4? Anybody want to speak to that?
I can answer the question, and the answer is yes, we do. It was granted long time.
Commandant Griffin? Oh, I thought
Yes,
you were
ma'am.
talking. Okay, I thought that
No,
was you talking over Bryce
no,
there.
that's Robert Walker.
Oh, hell, so we'll get a copy of that, make sure that we've got that distributed because we don't want to pass any bum scoop. But
Right.
yes, our COO would have a document of that. So we'll make sure that we'll attach that information to this recording when we actually post it to the YouTube channel. Thank you, Bryce.
Yep.
And thank you, Commandant Griffin, for
I'll
that.
send it to you. I've got a copy. I'll send it to you, Victoria.
Hurrah, we'll get it on the editing. I appreciate that. I personally have a question. Anybody else that might have a question, please virtually raise your hand. You do that by hovering across the bottom of your screen. You're going to click that little thing that says reactions, and then there's going to be a long bar that says raise your hand if you would do that. My question is, and this came to me and I didn't know the answer, and I'm glad that you're here with us. I think I know the answer, but I'm going to let you speak to that on a public forum here. Why can we not, if we are officers or members of this organization, 501c4, why are we not considered tax exempt as it pertains to our hotel reservations going to conventions and conferences?
Yes. So this brings up the point of the IRS is issuing the tax exemption, and each state then takes that tax exemption and looks at it as to how they want to. So there may be additional taxes that, depending upon the states, that you could be subject to. So the lodging taxes, sales tax, property tax. Just because the IRS says you're tax exempt from income tax does not cross over into all of the other areas. So that's where the lodging tax and sales tax, you're seeing those being assessed on the.
Right. I did assume that answer, but I wanted to hear it from the professionals.
Yep.
All right. We
I do want
appreciate that.
to, on that letter ruling that you guys have, one of the things I would say is do put it out there for individuals. So if you do have a special letter ruling that does say that, give them that leg piece to say, we have a special letter ruling that says that, and it lists off our 501c4, that a donation to the 501c4 organization would be deductible.
Absolutely. We'll go ahead and add
Yes.
it to the copy of this video, or at least a point of contact as to where to get it. That's for
Yep.
sure. All right. Thank you for that. Dave Porter Sr., you are up. Skip Nakashima, you are on deck. Go ahead, Dave.
But anyway, this was a question that for a number of years that we had, as far as if you're running a golf tournament for a charity
Okay.
and for the sponsor signs, is that considered tax deductible where they're actually getting something for the money as far as their advertisement?
You're saying for the what signs?
As far as the sponsor signs, the whole sponsor signs where
Oh,
you
sponsor,
end up
yes.
paying $100 for a sign, and then we put the signs out there? What
Yes.
is that actually considered? Is it deductible?
So it depends. It is something where if it doesn't have language regarding any call to action or any indication of savings. So as long as those sponsor signs don't say, mention you saw this on T-Box 9, get a drink token or get free chips or whatever it is that they have for indications of savings. Or if it's for all your automotive needs, come visit us at, or whatever it is that they have for a call to action. If it's missing both of those components, it really is just a recognition to say, hey, you know what, this whole was sponsored by, and it's got the name and logo of the business that sponsored it. That can be treated by that business as a contribution. It could be treated as advertising. Kind of depends on how they want to approach that piece for the business. And they might have a preference on either side of it, because it is something where advertising for the business is going to be typically more deductible for them, whereas the contribution component, they may be limited as a component of their net income.
Did that answer your question, Dave?
Well, it's up in the air then. So then if it's a business, they could say, well, we can put it down as a business deduction versus if it's an individual, then they can say it's tax deductible.
Yes. Yep. If it's an individual, they can say it's tax deductible on that whole sponsor piece because they wouldn't have the business side of it. Businesses can do either one,
Okay,
tax
thank
deductible
you.
contribution or business deduction.
Great question, Dave. We got a lot of golf tournaments going out there, so that is a great,
Yes.
great question.
Thank you.
You're very welcome. I will drop your hand down when I get a second. I can't do it for you. Skip, you are up, and Bill Reed, you are on deck. So go ahead, Skip.
Okay, excuse me. My question is if a person, an individual donates some equipment for the operation of the organization, is that value of that piece of equipment tax deductible? Such as a
person-
canopy that we're going to use or a generator that we use for the operation, for fundraising purposes or advertising. So we're using that as a detachment rather than giving it away.
Yeah. So this will come down to the question of that charitable component. So if you have the letter ruling with the C4 saying that the donation's deductible, then that's something where the equipment could be deductible. The limitation on it is that it might be limited to the basis that the individual has. So if it's something that they've had this equipment and maybe they paid $30,000 for it several years ago, but it's really not worth that anymore, they're going to be limited to the lesser of either the basis or the market value of that equipment. So if it's something where it's used equipment, it might be worth less, and then they would be able to take that for the deduction. If it's something that they just purchased it brand new, they'd be able to show kind of the receipt component to it. There's a second piece to this that they're going to want to watch for, and this is if they have a donation that their equipment is worth more than $5,000. They may need to get it appraised. They may need to get a signature from the organization. And so that signature component is one where you might be receiving what's called a Form 8283 that they're going to want you to sign saying, we received this piece of equipment. There's also another section to that talks about an appraisal. You would not want to sign as the appraiser unless you truly are a qualified appraiser in whatever the equipment is that's being given. Most organizations, I would say, are not, though. But you're going to want to sign where it says they gave it to you, but not the appraiser section. So make sure you're not holding yourself as an appraiser unless you truly have that skill.
Okay, do we need to give them a W-2?
No, not a W-2. It would be the receipt component.
Just a receipt that we received that piece of equipment and an estimated value?
You wouldn't even put the estimated value in there because you don't know how much they paid for it and you don't know what that estimated value is. You'd have to put a description of it in there. So if it's something where there's let's say a vehicle, because that's easy, you'd have the VIN number, the make, the model. If it's equipment, whatever the description is of that equipment to say,
Yes.
here's what we received, here's the canopy, it was this dimensions.
Okay, thank you.
Great question. Thank you very much, Skip, for that. We are running short on time, so we're going to take the hands that we have up here as well as one that I have offline that did not virtually raise his hand yet. Bill Reed, you are up, and El Commandante, as we know as Bryce, you are up right after Bill. So go ahead, Bill.
Okay. All right. So going back to the whole 501
Billing.
C4, I believe section 170C3 covers that. But some of the stuff I'm seeing specifically states that 501c4s that are organized as a war veterans organization with 90% of the membership, those contributions are tax deductible. And so I'd like to ask, perhaps this is a question for the MCL leadership. can we get a copy of the determination saying that contributions to us are tax deductible? And then also, do individual detachments have an IRS determination letter? Is that something I have to contact the IRS with? And then lastly, I'd like to ask, why are we a C4? Because we here in New York have missed out on grant opportunities because we were not a C19 or a C3. I believe C19 basically, excuse me, I believe C4 kind of preceded 3 and 19. Maybe it's time we switch to a 3, or can a detachment create its own C3? That's it. A little long-winded, but I'd love the answers.
And if I can answer some of that can take a little bit off your plate, please. The determination letter, again, I will get a copy of that, or I will put it on this recording that will go on the YouTube channel, and that will be made available. We'll get it directly from Bryce West, or we'll also be putting in the contact information for COO Bob Borka. As it pertains to why are we a C4 versus other things, that's a little bit more on the league side of leadership. That's not something that Ann can speak to right now. And yes, I can answer that determination letter coming from our parent organization, which is national. It does pertain to detachment levels. So, what they have established at the national level does trickle down to a detachment. So, Ann, is there any other comments pertaining to his questions?
I think there's 2. You should also have an annual listing of members included in that group exemption. And so that would be one thing too, that you're included in some sort of book or listing of members. You'd have that piece. And then the other thing you asked about setting up a C3, you could set up a C3. Now this is going to come down to your national requirements and those components, but a C3, you would just have to show what that charitable purpose is and restrict the donations going into that to be used for that charitable purpose. And that's where the 1023 or 1023EZ would be filed to establish that organization.
Great.
How you feel, Bill? You got answers you need, some tools for your toolbox?
Yeah, it's probably more work to be done, but we did miss out on grant opportunities because we weren't a C3 or a 19. And
Okay.
maybe we can have some kind of subunit in our own detachment as organized as a C3.
Commandante, better known as Bryce, you are up. And then we have one on deck, and that's going to be Andrew. Go ahead.
All right, here's my question. So, many detachments do Toys for Tots. We have a coordinator, and so operating under Toys for Tots, they're a 501c4, and, we can apply for, I assume our coordinator can apply for grants as a C4 operating as Toys for Tots. But my question is, the big struggle is always warehouse space. You got to have a lot of warehouse space to do a Toys for Tots drive. And I know cash is king for business owners, but if you've got a real estate, somebody that owns real estate, a commercial building that is empty, and they're actively trying to lease that space, and maybe it's been vacant for quite a while. Can we approach them and say, hey, if the fair market value of the lease on this is $5,000 a month, can you lease it to us for $1 and then deduct that expense on your business taxes? And it's just like getting paid cash, correct? Am I wrong in thinking that it's one hand or another? They're not getting paid cash, but they're getting to deduct it on the backside. Am I crazy by thinking about approaching people about that?
Well, the IRS will look at it a little different, where they won't allow the deduction because there's not the cash coming in. Now, if they were to collect the cash and then but then it really kind of runs into the situation where, they're collecting the cash, you're paying for the lease, and then they're making an expense and paying you. Now that's pretty much netted down to zero. So they could deduct that second piece if they didn't have any goods or service exchanged for it. But if you approach them and say, hey, let us use this space, we'll use it for a discounted rate, that's something where the IRS says it's for the use of a space, and that use of a space or a service that's being provided is not deductible.
So short answer is no.
Yeah, short answer is no.
Okay.
Yeah.
Good question. Always a good question, because yes, everybody struggles a little bit. We're going to take one more question and wind it down. Keep in mind, even after recording, we stick around, we talk offline, we get some of that scuttlebutt happening without being, Big Brother watching over us. Andrew, go ahead and unmute. You are going to close out our Q&A session.
Good evening, everyone. My question is this: up here we've got some of our detachments operate under Toys for Tots at Christmas time. Others, especially some that are in the more rural outlying areas, do their own detachment toy collections. Toys for Kids, detachment toy collection, whatever they want to call it. My question is I know that any monetary contributions received through Toys for Tots, it's all handled through them. It goes into their bank account, used to purchase toys, so on and so forth. As for those detachments that are working independently, is there a form or an accountability they should be following? Is there a form they should file? Should they keep track of those as a donation, like against the 990, or is that still considered just a charitable kind of donation? Don't worry about it.
That one's going to depend on how they're structured. So if the Toys for Tots is operated within the C4, that's where then you have those C4 components that we've been discussing. If they've gotten a separate exempt status, they're a separate legal entity, then they're going to have to provide whatever receipt it is based off of what they've set up for their legal status and what they have for that the tax status as well.
If I may, what I'm
Okay,
hearing Andrew asking is his detachment, which is obviously, a 501c4, is just doing something for their community. They're collecting toys and some monetary donations to go buy more toys, not so much parenting off of the Toys for Tots Foundation, but just something their detachment does. Am I hearing that correctly? Right. Okay.
Yes, it is.
Okay. Yeah, so you're collecting the toys. Is it from a bin, or is it something where you know who's giving the toys?
I think most of them set up like Toys for Tots. They put out collection points and come back every so often, collect and pick them up.
So you really don't know who's donating. So I mean, I would say that that's an anonymous donation, and you really wouldn't have a receipt, because who are you going to give the receipt to? So there really wouldn't be any component there. It's just that particular location or where the drop box is at, they're facilitating it, but they're not the ones that are actually giving the items.
Okay. Thank you.
Thank you very much. And thank you, Andrew, for the question. Looks like somebody snuck in. Again, I called no more questions, but Sebastian snuck in the back door over there. So Sebastian, go ahead very quickly. I'll let you get that question in. Go ahead.
I'm a prior service Marine, but the reason why I bring up the Toy for Tots situation is so in the past, like on base, they would give us a gift card to go buy toys, and then we would give the receipt to the toys to the Marine League Foundation. So that'd still be 501c. Would they still have to put that in the 501c? Because the donator is technically the DOD or the government, because at the time it was the Army base. So but what they do is they give us a gift card to go buy toys, and then after that we give the receipt to the Marine League. So is that still like a 501c4 problem, or what kind of like taxation is that?
And I'm actually going to jump in on this one. Because the Marine Corps League is 501c4. Toys for Tots, we're not talking about tonight. They're their own organization. They're a 501c3. They do business a certain way. I don't know if Russ Miller is still here. He is our Toys for Tots liaison. Can maybe speak to that. Let me see if he is still on board. Yeah, he's here. Russ, can you unmute and maybe speak on that a little bit? And we'll just close it up with that. I don't know if he's available. Yeah, we have a whole separate section and a couple of videos on the YouTube channel as it pertains to gift cards and Toys for Tots and all of the movement of donations to the
I just wondering
Toys for
because like
Tots.
I've just been the Marine who buys the toys and then gives them out, and then at the end we just give the receipt to the Marine League. And then as hearing this conversation as being the Zoom meeting, it just got my curiosity.
Yeah.
So yeah, that's
Can you
about
hear
it.
me now?
Okay, we got you, Russ. Toys for Tots liaison for the Marine Corps League. Go.
Yes. So Toys for Tots is a 501c3. If funds are collected in the name of Toys for Tots or using the Toys for Tots logo, there is a fund handling system in the SOP by which those funds have to move through Toys for Tots Foundation and they are the ones who then would send the letter of donation as a 501c3 that the donation was received and so forth. So that's that component of it. As far as detachments that are not running a Toys for Tots, so if you're doing your own special thing in your area, there is no Toys for Tots in your area, but you're, toys for, kids, whatever you want to call it. And you're doing that is under your detachment. And that's where we get into the sticky wicket of a 501c4 versus a 501c3. So there's other details that go into that, other components that play.
Sebastian, did that help clarify a little bit?
Yeah, that answered my curiosity. Thank you very much. Thank you, ma'am.
Oh,
Thank
you
so
are
much.
very welcome. We appreciate all the questions. I am going to close up the recorded session of this Zoom, but again, we stick around, we socialize a little bit, and you can leave us crazies at any time. But we do like to thank you very much for this general information that you passed along, advising everyone. We have 50 people on board, and those that are hearing this recording at a later date, please understand that state to state, you are also going to have different regulations. All of these topics and bullet points you brought up, bring them to your tax advisors and ask those questions and make sure that your state's not requiring this or is requiring it and you haven't been doing it. We want to make sure we're doing it correctly. So again, Ann, we appreciate your time tonight. And in closing, I always like to ask once again, Commandant Griffin, go ahead and close us out with closing remarks, sir, please.
Okay. First, I want to thank Ian. Thank you an hour's worth of great questions and information, making us a little bit smarter. And somebody asked a question about our status. About 5-6 years ago, we went through this tax status, and 501c4 is our tax status. Everybody has to be on the same page of that. We've tried to clean that up over the years, that there's not going to be a 501c3 detachment and a 501c4. We're all on the same page then. So thank you very much, Victoria.
I appreciate your time with us, sir. Okay, in closing, next Tuesday, April 9th, our scuttlebutt is scheduled again, 1900 Eastern Standard Time. The topic of discussion will be recorded and not put on the YouTube channel. Next month's Zoom is going to record it and put it in the library. And the reason why is because we'll be talking about some things that are very sensitive to the Marine Corps League. Our National Judge Advocate Dave Porter Jr. will be talking with us about Chapter 9. Okay, a lot of movement. And if anybody ever wants to take a good nap, you can open up those Chapter 9s and just start reading. It's a lot of work involved. So we're going to have our National Judge Advocate speaking to that topic, and it'll be recorded. It will be on the website in the member library after, of course, editing is done. So we look forward to seeing everybody then. And then, of course, in May, don't forget pre-planning, VA death benefits, and all those questions therein. I always close out by saying thank you all for attending. Make sure you spread the word. Make sure that every single member knows that they are welcome to come to these events. We can hold up to 300. Let's go ahead and fill the room. Good night, Chesty, wherever you are. Semper Fi, everyone.